Hello and welcome to another update video about Link. On the Link chart, wow, I mean, really boring price action. We've seen a decline here into the support zone. That micro support area is currently being respected, but there hasn't really been a positive reaction to that support area. So from that point of view, I can't really give the blue count preference, even though it's valid and a reasonable assumption as long as we're holding that micro support area between $13.39 and $14.31. So this is sort of a key, you could say a key support area here, just on the micro level, really. You know, if it breaks, it doesn't make the entire chart bearish. It just means that, okay, this is even further confirmation that we get one more low. We can see, you know, downside pressure across the board here as well. We can see that the price is still below the trend line. For really clear confirmation that we are coming down, though, in wave 5, in the white count, or even the C wave, they're just both like different patterns that both allow for another low. Next support would be $10.68. But for, you know, for further confirmation, I would really like to see the price break below $13.39, followed by a break below the $12.79 level, which is the 38.2 retracement. So, you know, it's not only that, it's also the previous swing low here. This, what I have labeled as wave 2 in blue, because if that level is taken out, then the blue microstructure, in which the price could form a leading diagonal to the upside, well, that will be invalidated, okay? Already now, I mean, these are patterns that are just not highly reliable. They are valid, you know, you can assume that this is playing out. There are objective levels where they get invalidated, but it's just not a very reliable pattern because it could just be a corrective structure. It could just be a corrective rally, as I've shown it in the yellow count, in which we, and you know that one already, in which we move down in a WXY structure and the Y wave is an ABC, or we're moving down in the white count in which we have an ABC and the C wave is some kind of an expanding diagonal pattern. I have to say, though, the wave 4 is a little bit too high then to be reliable as well. So, but still, there are two corrective patterns that allow for one more low versus one in which we could have bottomed, and that's not even an impulse, which makes the entire thing a little bit unreliable. Okay, so if there is another low, we need to get that confirmed first with a break below $13.39, and then obviously a break below that, $12.80 level would confirm that fully. Okay, confirmation is no certainty. However, the market can always change its mind. It's more about understanding when the likelihoods and probabilities shift. Okay, there are never guarantees in these markets. And the next main support is $10.68. Then we have some structural support around $9.50. And then $8.92 is another Fibonacci support level. And if we zoom out a little bit, you know, the entire structure is considered a 1-2 setup, really boring, but the price isn't doing anything that is in any way unexpected, or unusual. No, it's just a normal wave 2, which could even extend a little bit further, as I've just mentioned. The idea is that this entire move up obviously needs to be corrected. So this entire rally in 5 waves, that obviously needs to be corrected. That is currently being corrected. The only question is, how deep is the pullback going to be? And until we get a 5-wave move to the upside, we just have to expect further downside. Maybe it happens, maybe it doesn't. At the moment, it looks like we might get another low, but it's not necessarily about like predicting it, but more about being prepared for it. So that means if you want to lower your cost, if you plan to add in the pullback in an overall uptrend that could have started, then you want to hold back some, some funds maybe, and just be aware that below $6.90, which is the 78.6 retracement of the entire rally, most likely the bullish potential will not work out. Well, at least it will reduce in likelihood. Overall, don't forget that the reward to risk ratio on this, on this trade, basically, on this pattern is pretty positive, especially the lower we go, because the third wave should take us to around about $90, maybe even a bit higher. And, we can say that, there is a key support level at $6.90. The invalidation point is a bit lower. It's around $5. That is the June low last year. But even if you set the stop below that, I mean, it's a phenomenal reward to risk ratio. All you need to be, you just need to be patient, not greedy, patient, and just do your trader math and then just let it do its thing. Maybe it will break, but that's why you have a stop. But if it works out, this could be amazing. That's my update about Link. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.